Let's get right to it. Leveraged positions dictate price. And for the past week, Bitcoin's price wasn't about fundamentals or news. Nope, it was on a hunt for liquidity. We're going to break down exactly how that hunt played out. So on December 11th, things really hit a boiling point. I mean, just look at this heat map. You see that incredibly bright yellow band? That right there is a massive pile of leveraged long positions, basically a perfect target just sitting there waiting to get hit.
That's over $101 million. Let that sink in. $100 million in 4 sell orders. This isn't just a number. It's the rocket fuel that powers these sharp, violent moves in the market, and it was all stacked up, ready to go.
Yeah, this crazy price action was not a coincidence. It wasn't random. It was a calculated, multi-day campaign designed specifically to trigger those liquidations. And we're going to walk you through the entire playbook step by step. Okay, so first things first. How was the stage even set for this hunt? Well, it all kicked off with a period of really quiet, boring, sideways price action, the kind that lulls everyone into a false sense of security. What's so fascinating here is you can literally watch the trap being built. Between December 7th and 8th, while the price was just chopping around, going nowhere, look at these huge yellow bands of liquidity building up. You see them? Both above and below the price. These pools are basically magnets, just pulling the price towards them. And for anyone new to this, liquidation leverage is super simple. It's just a pool of automatic sell or buy orders. When the price hits these levels, it sets off a domino effect, a cascade that adds insane momentum. It is pure market fuel. So after trapping traders on both sides, the hunt had to pick a direction. And in a classic move, it started with a fake out by moving up. And there it is. On December 9th, the price just surged. You can see the candle just punching right through those upper liquidity bands, wiping out a whole bunch of short positions. This whole move was designed to look incredibly bullish, to bait more and more traders into piling into longs. If you don't want to miss analyses like this, subscribe to the YouTube channel. Now this is the really critical part of the tactic. As those shorts got cleared and the price looked super strong, breakout traders jumped in, piling into new long positions. But all they were really doing was adding more fuel to that massive liquidation pool that was just sitting below the market. The trap was now set, and it was bigger than ever. All right, so the trap is set, the fuel tank is full to the brim. It was time for the main event, the takedown. And here is the money shot. On the left, at 8 a.m. on December 12th, you can see this absolutely massive, dense yellow band of over $64 million parked right at $90,500. Now look at the image on the right, just 4 hours later. Price crashed directly through that level, and that bright yellow band, it's completely gone. Just wiped out.
This wasn't just chaotic selling. This move was surgical. Price went straight for the zone with the highest concentration of trapped money, which caused a cascade of forced selling that just hammered the price down even further. Drop a like and share if you find this valuable.
So, after that massive shakeout, where does the market stand now? Well, the board has been completely reset.
As you can see in the current heat map, all those massive pools of long liquidations that were below us are gone. Now, the largest, brightest yellow bands, the new price magnets, are sitting above the current price. And notice that dense cluster of short liquidations that's still just hanging out up there near $94,000.
So this leads us to the critical question, right? Now that all the fuel from the longs has been burned, is the market's next logical target that big old pool of short liquidations that was never fully cleared out? Follow us on Twitter for more updates. But it's so important to understand that all of this chaos, all this drama, was contained inside the derivatives market. The underlying network itself tells a very, very different story. So just to recap the derivatives action real quick. First, the trap was set as liquidity built up on both sides. Then came the feint, the fake out to the upside to lure in more longs. And finally the takedown, the liquidation crash that wiped them all out. Now, contrast that derivatives chaos with the on-chain reality. During that entire week of the hunt, look at this. The Bitcoin network's market cap barely budged. The hash rate, which is a key measure of how secure the network is, actually went up. The supply schedule, totally unaffected. So while all these leveraged traders were getting absolutely wrecked, the network itself just got stronger. Honestly, this is the perfect way to think about it. The derivatives market, that's just the daily weather. It can be stormy, it can be unpredictable. But the blockchain, the on-chain data, that tells you the long-term climate. And the climate is looking pretty solid. Subscribe to the YouTube channel for more data-driven insights like this. So, what are the big takeaways from all this? Well, number one, price follows liquidity. It's a magnet. 2, these huge volatile moves, they are often manufactured. They are not random. 3, the health of the derivatives market and the health of the actual Bitcoin network are two completely different things. And finally, the next major hunt might just be to the upside.
The real key here is this. If you understand where the fuel is, you can make a much better guess about where the fire is likely to go next. Now that you've seen exactly how these hunts are carried out, it should fundamentally change the way you look at short-term price action. Subscribe and drop a like below. Follow us on Twitter for more updates. See you in the next one.